Hello everybody, XLTrader here. Today I'd like to give you an update of some S&P 500 charts. This first chart is our XL cycle singular spectrum analysis cycle forecast. And this forecast here was put together on July 17th, which was right back in here. So you can see we've been following the forecast pretty good, and it's predicting time for a brief change in direction here. Let's go ahead and update this chart. I'm going to just overwrite the red forecast with a new one, and I'm going to use 10 principal components or reconstructed components because that's what's on that other chart, and I'm going to use a maximum entropy forecast of 20 bars, and I'm just going to overwrite the existing forecast. There it is. Let me change the color. Yellow is hard to see. Let's go with the red again. Okay, so the new forecast is telling us that it hasn't changed that much. The market's going to sell off for a little bit here, and then it should head back up in about another 10 days or so. The next chart is the Carl Fuchsia forecasting method. This is a weekly chart, but as you can see, the vertical lines are timelines, the horizontal lines are support and resistance lines, and they work pretty good. Got up into this congestion area and sold off a few weeks ago down to support here. Now we've ratcheted back up to this resistance. Stopped perfectly on his resistance at 980. That's the Carl Fuchsia method. This chart is made with XL planets, and what we're looking at is the planet longitude. I wanted to say latitude, but it's longitude converted to price, and we convert that to price by adding or subtracting a multiple of the degrees. To get with this S&P 500 price action, I'm adding or subtracting, well, never subtracting, always adding, in this case 360. So we took the longitude of Neptune and added 360 to get it up to this location. Now also these are the fourth harmonic, so would take 360 and divide it by 4, which is 90. So these curves are 90 degrees apart from each other. Now, this is what I like to see at a major low or a major high. I like to see planets giving support. This is Micula talks about this method, and so does what's his name? I can't remember. Anyway, this is planet support and resistance. Right now we're up against Neptune. That's that. This is the Gann box, square of 144, that I've been showing quite a bit. As you can see here, the market turned early. It didn't wait for this line here. It was a few days ahead of schedule. I would have liked to have seen this high fall right on that line there. Didn't happen, but we did sell off down to these support lines here, and now we've ratcheted back up to the upper end of that box, which is at 988. So if we tag 988, I'm pretty confident that we'll see a sell-off of significant portion for a few days. A few weeks ago I showed a price time method, which I call the triangle points. The apex of an isosceles triangle gives you a turning point, and I like to see a bunch of those lining up. Like back here, they all lined up, and we had a minor sell-off. I just wanted to show this briefly to show how I like to watch it. These are also related to Cowan's vector methods, for those who have read his books. Yes, I'm implementing price time vector stuff here. There is a triangle point right on that high based on this series. Now this is the Gann angle chart that I've been showing for a few weeks, and as you can see, we're up against this line here. That Gann angle is based on the price from the beginning of the bear market, that high back in 2007, but it's positioned above this high, and you can see we're bumping up against that. We're also into this resistance coming off these other highs, so possibly a sell-off. On the other hand, we could be headed up to this level here before all is said and done. We'll just have to wait and see. Now lastly is my favorite Midas chart. Wanted to mention that Technical Analysis of Stocks and Commodities magazine is doing a series on Midas. This last month they covered the top finder / bottom finder curve, which is in our toolbox, but I find fewer opportunities to use that thing. When it works really nice, but it's just we don't get those opportunities every day in the market like we do with the support and resistance curves. We can use those all the time. For instance, this support curve here was able, when this high was in here, we were able to put in this parallel offset and make this channel, and that channel has told us right in this area to watch for resistance, and it sold off to this support. Now it's ratcheted back up to this resistance, and it's congesting there. This is the top. This red curve is the support resistance curve coming off the top of the bear market. So it should turn this market back. What we're looking at with this is on balance volume. I like to see a divergence between it and the price action at major turning points. That means that we should have lower on balance volume and a higher high at any significant high, and we should have higher on balance volume and a lower low in the price at any significant major low. Now lately that hasn't happened. It didn't happen here. I don't see it here, but it did happen back in 2007 at the top of this market. Also, we need to keep in mind that there's trillions of dollars sloshing around in the banker funds, and they're using it, and I suspect they use it to control these indices far more than they do individual stocks. So this method may work better on individual stocks than it's going to work on indices these days, unfortunately. We have bankers adding dither to the market, creating, I don't know, well, let's just say we don't know what affects their trading. Goldman Sachs is 40% of the volume on the Wall Street, so they're a major force to be reckoned with these days. Anyway, that's it for today. Thanks for watching. See you next time.